The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this 15th day of June, Thursday, and we're looking at the Dow futures down 55. There's a lot that I need to explain here. Based on the Chapman Wave methodology, the S&P futures, this is at 8:06 or 8:07 in the morning, so the show will be recorded and replayed later on. So what I am looking at here is the Dow futures are only down 54 points at 34,230. My suspicion, if this is correct, and I'm calling this for now, a peak G/C. That means we've got to be ready. This could be a G, and we could be pulling back from here. If you're looking at the E-mini, and just for the moment, I'm going to go to the futures because in this case, I've got the charts for the weekly and the monthly. I don't get it if I'm getting the new contract. So this is the chance that it's a peak F if there's no new high today with a long-legged doji yesterday. So I'm going to go through everything in a moment. I just want to go through the futures. So the futures are down 15. This is really not bear market material. Bear market material is if the futures were down 48, it tried to rally, and then mid-sessions like minus 60, then it tries to rally again and then closes at the low of the day. And the next day, the futures are once again very sharply low. They try to bounce overnight. They can't, and they open, and you repeat the same process for 2 or 3 days. That's bearish action. This right now is cautious action. If you're looking at the, and let me just go to the N, let me just go to the, I'll go to the NQ, which is the futures. I haven't updated this. I should have updated. Yeah, so this is a G/C right now. This is the same as the Dow. But this is really what I wanted to show you in the context of patterns, and that's of course what we're looking at. We pattern recognition, as Larry Pesavento always says, pattern recognition is absolutely key. And in this particular instance, look, the MACD in the E-mini Nasdaq 100 continuous contract, the MACD is making that M shape. Is very overbought. The 9-period over the 14-period moving average, that is excellent action. The price way over the 9, all of this, it's a process, and that's why I said that I think it's next week that we start to see the real test. Is there further acceleration to the upside? Are we starting to slow down, or do we start to make lower highs and lower lows over the near term? The IWM, I'll just go to the cash. You see this cash right here. IW, look at that big red candle, 185.46, down 45 cents. That's really not bad. And even the futures and the E-mini down 14. So I'm going to go through what happened yesterday. But in the meantime, back at the ranch, as I said before, this appears to me to be a process of some kind of a topping action. Even the topping action looks like it's a topping action initially for a fairly mild, just a digestive phase, a correction. No, not a correction, just a digestive phase. Now I want to go to gold, and this is part of this is a clue here. Gold is down very sharply, down 30.6. It's not Friday. Very often on a Friday we see it down 30. 1939 minus 29. Now what this does is it's sitting on the 200-period exponential moving average. It's broken all the Fibonacci numbers that I've got here as support. It's got the arch formation, that's the dreaded H. We took out the left side continuous contract low of the, what is that? That is the 10th, no, it's the 30th of May at 1949.6. Here we are at 1939.8. And you can see what I've been talking about. in the gold contract for the weekly chart, look, that was a peak F, and we've just been making lower lows and lower highs. And it just says to me that gold is in this very big digestive phase. So far, it isn't crashing per se, but it is really taking quite a hit. And when you consider that the dollar, which is up 20 ticks today at 103.19, has not a very good chart pattern at all. In fact, it looks very much the actual 2 weeks or 3 weeks that we've been going down looks very much like the gold, although it's a different pattern completely from the daily chart. And here we go to the crude oil. It's up 57 at 69.03, stuck in a range. Looking at bonds, we'll go to the actual bonds right now. The U.S. continuous contract bonds have got the arch formation. So you can see that all the inflationary aspects, which is what the Fed has been talking about for so long, a great deal of them are already dissipating. Yes, you've got, if I go to wheat, look at this, that's wheat. There we go. Wheat is strong. So that's the reason why the DBA is holding so well. We are along the DBA, the DB futures. Experiencing a delay. There it is. Just about very close to starting a leg B, rising highs, very nice action, corn. So when I try to put the package together, you've got the grains moving up, not sharply, but they're moving up. And that just says to me, the whole aspect of inflation, deflation, etc., is it's kind of a mixed picture. But what really is key is that when you're looking at the dollar TNX.X, there it is. When you're looking at the yields, you've gone on the left side, this is the daily chart, you've gone to a D. Remember, Chapman, we're always looking for that fourth highest peak D. That's where other things can happen. It did pull back. The 9-period moving average held very well, so it didn't go to a down arrow, meaning a sell signal or a sell mode. And now you're trying to test ABC, another gray ABC, trying to retest the left side high, 37.96. That's 3.796 for the 10-year yield. It is rising, but it's not breaking out. Although the weekly chart says, hey, it's walking the 9-period moving average. All of that is very good action. Most importantly, I want to just focus on what is absolutely important, at least for my subscribers to my opening call, because we've been taking profits. We are prepared to switch to the short side. We have certain plans going on for the next couple of days. We'll see what happens. Monday is a holiday, so the futures will be open overseas. We're going to be seeing what happens between today, tomorrow, and Monday overseas, and then Tuesday starts the next week, and that is going to be a critical week. Why? Because you can see right here, look, the YM, Dow futures are now down only 37. So I'm keeping this intact as a G/C. We have so often seen that the G/C actually does go to the D, takes a few days to do that, a few bars to do that, watching it very closely. If you're looking at the E-mini, now let's go to the E-mini contract right here. This is a futures contract, short term. Oops. We've got the music coming up. Can I get to it before the break? Okay, there it is. We had the 1-minute chart is the second buy mode, C, and the 10-minute chart is in leg B. I think that this is not that bearish. I'll be back in a moment. Basil, Chapman, Tiger, Traditions Hour.
We have exciting news, Tigers. This June, Tim Ord of the Ord Oracle will be hosting 2 webinars, providing insight into his renowned market timing methodologies. On June 8th, Tim will delve into the S&P 500, teaching sentiment indicators, identifying market bottoms and divergence, and so much more. On June 15th, Tim pivots to the gold market, taking a look at cycle analysis, ratio studies, advanced decline indicators, and other important tools for analyzing this sector. Sign up today on TFNN.com. TFNN, educating investors.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kickstad's Tiger Forex Report. Teddy Kegstaff breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, Basil Chapman here. Let me just have a quick look at something here. Okay, so we're looking at the U. I should have used that contract. I forgot all about it. So this is the U contract. Yes, so this is, so you saw the E mini went to the second peak right here. It went to an E and then it pulled back sharply. Technical start to weaken, and you've gotten a leg A and a leg B in the 10-minute chart. All right, let's get back to what's really important at this particular stage. Are we looking? And let's go to the SMHs, the semiconductors. And so I want to do an analysis here of what I'm really looking at in terms of just on a purely technical basis. And no, I can't take that. So let me just, all right. So as we are looking at the market, the SMHs have begun to lead once again. I always like it when the SMHs, the semiconductors, lead, or the semiconductors start to fail and you get the diversion. How does the market respond to that? And this particular instance, we're looking at the SMHs in leg D, as it could be an alternate count, but it is a leg D, making a cup formation, breaking out above it, looking at the weekly chart. Let me just stretch this out now. I think everything's working so far. I shouldn't even mention the word today. Look at this cup formation. Beautiful bar symmetry from the high that was made in the semiconductors back the week of the 7th of January at 159.35. Plunges down to the just above 80. I think it was 81 or something like 80, 83.49. Let me just type that in there, 83.49. Back in October, 83.49. And screams up to a peak D, takes about 7 or 8, 6. That E is an alternate count, and it goes to a G/C right now in the weekly chart, trading at yesterday's high in the 155 area, just under that 159 level. Isn't that not remarkable? So here, the MACD in the daily chart is very strong. The stochastics at 91, and the on-balance volume is overbought. And within that context, what we're looking at is the daily technicals are fabulous. The weekly technicals are very strong. So I'm suggesting to you that if at worst what we're looking at is a consolidation takes place, even if it comes down between the 9-period moving average of 148 and the 14-period moving average support of 146, that would be really good action, digestive phase. But so far, I don't really want to fight the uptrend, but I do want to be prepared because we've done very nicely with our long positions. I want to be prepared for some kind of a pullback. Just be ready for it. If I'm over-anticipating, that's okay. We're still keeping those most of the long positions, the UDOW, the 3 times long. I'm prepared to get out of that. We could switch. We could do anything. But at this particular point, I'm trying to say, we've had fantastic gains. To expect them to continue, I mean, let's just go back. We were looking at Hack, right, for a couple of days. And Hack made a new recovery high. Really strong move, going just in the last 5 days, just from the 48 level to the 50.41. It doesn't sound like much, but for this particular instrument, Prime Cybersecurity ETF, that's really good action. So you could come back, go back to that semicircle. Remember, that's Chapman Wave Instant Restart. And what I'm going to do right now is I just need to write a message. Just give me a second. And then I'm just going to, okay, there we are. All right. So within that context, I'm going to do this. I'm going to say, and our bots, which is this we've been long for quite some time, it hit 29. Oh, I didn't even update it. I think 29.51 was at yesterday's high. So this is really the big thing, the Global X Robotics and AI ETF, which we've been long for some time. Yeah, 29.51 yesterday. It's trading right now 29.21. Big deal. A little bit of a digestive phase. But this is exactly where you could start to see a lot of choppiness, and it's got not quite the one-to-one in the there are just so many technical indicators that I want to talk about right here. Let me do that. Just use this tomorrow's Technical Friday, but I'll do this right now. Look at the cup formation. Look at the symmetry between that high that I chose for a cup formation. It's not really a cup. I choose the cup because there's a certain technique that I use. That was 26.93, the high back in April. It comes back down, and the number of bars on the left that it took to go to the right side, number of bars, it didn't quite work. It failed. But then all of a sudden, because it was walking the 9-period, this green line, the weekly chart, the 9-period moving average, it just kept making higher highs and higher lows. And now what we're looking at is within the context of just the lettering, you're in a leg E, almost at the previous major high, and that major high that is in the weekly chart of April, which is at 29.97. And as I say, yesterday was 29.51. You're within pennies of that. That's the other reason why I'm saying let's be a little bit cautious here, because many of these charts have gone back to within pennies or a dollar or so of their previous serious high. Not the all-time high. That was 39.09 in the Global X Robotics back in January of 2022. But yes, you've almost expanded to a one-to-one to the upside. And in this particular instance, the MACD is just just looking really strong. Stochastic at 96.83 is looking really strong. But that blue line is the on-balance volume. That's telling me that on a very short-term basis, we're becoming very, not just, but very oversold. But that's not to say that you have to smash the downside. That's an indicator that says I could become very choppy at this particular level, but I could have a red, I could turn down, and that could have the price of whatever you're following pull back. Just a pullback. That doesn't mean to say it's a major smash to the downside, not until you get all the technicals in sync, and they're not. So that says, and that kind of corresponds to everything that I'm looking at that says there's a chance that we're in a digestive phase. And that digestive phase says it could be selective. We don't know yet. And if it is selective,
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
We have exciting news, Tigers. This June, Tim Ord of the Ord Oracle will be hosting 2 webinars providing insight into his renowned market timing methodologies. On June 8th, Tim will delve into the S&P 500, teaching sentiment indicators, identifying market bottoms and divergence, and so much more. On June 15th, Tim pivots to the gold market, taking a look at cycle analysis, ratio studies, advanced decline indicators, and other important tools for analyzing this sector. Sign up today on TFNN.com. TFNN, educating investors.
We're back. Basil Chapman here. This is the early edition. Well, it'll be 8:30 a.m. in the morning. Oh, that's it. That means there should be some kind of a news event coming out here. Let me just see. I'll go to the E-mini right now for a second. E-mini, a big spike up, big spike down. Now down only 15 points. trying to decide whether or not this news is good for the market. I'm suspecting that there is enough out there to have some kind of a bounce. The action yesterday was not that bad at all. So I suspect that there's enough residual strength and that it'll be next week that we really get the tell on whether or not the Dow so much, but the overall market, that's the S&P, the QQQ, Index 100, trading vehicle, the IWM, the Russell 2000, whether or not they're able to sustain the rally or whether we've got the rollover from one sector taking a bit of a breather while another sector that's been weak. For instance, let me show you this right here. So this is the E-mini. It's really working very hard. You can see this chart in the 1-minute chart. I suspect that there's just enough strength to try to rally a little bit, but I don't know if we're going to new recovery highs right in this particular phase, much higher than we've seen this week. We could go a little higher, but not much higher. We'll see what happens. All right, within that context, that was, I want you to... Okay, so here we are. So I'm going to go to this right here. That's the daily chart. So a couple of things. I just wanted to review and see at this particular point if the bonds are doing very much. The U.S., I did this before. So the bonds are down 13.30 seconds. That's almost a half a point at 126 and 19.30 seconds. I might be a little slow. Maybe the TLT is a little quicker. I'll go to the TL. No, they're all doing the same thing, down 14 cents at 101.88. From this pattern here in the weekly chart, you see this what looks like an arch formation with another second arch. I call that the lowercase h that goes to a lowercase m, just in terms of patterns. And what we're looking at within that context is the key is the 99 to 98 area. And within the context of yields going much higher, if you go to the $TNX.X, there we are. You're looking at very interesting. I love to draw this in as a rectangle formation. Here's the daily chart. Look, a rectangle formation right there. Then it becomes a lopsided cup, like a gravy cup pattern right here. Look, lopsided. I'm going to move it just a little bit to the right because I get upset with the lopsided part of it. Okay? And look what happened. The high that was made in the yields, the 10-year Treasury, there we go, Treasury note, not bonds, Treasury note yield at 3.859 on the 26th of May, went to 3.851. Just missed making a new high. So this is what I like to do within that. I say, if there's a sharp, like a flagpole, and then a sharp move down, if the price starts to go to higher highs and higher lows immediately after that, there's a very good chance that it's going to go to just under, right on, or just above the previous high, and will then turn down. And then you got to monitor the midpoint of the rectangle formation, and that would be 37, call it 37.38 at this particular point, 37.38. So this is going to be very important. Why? Because you've got the pattern that says rectangle patterns very often go to the previous high on the left side, and this is doing this exactly. It's gotten there in leg C. I'm still calling it leg C because we have to wait for the full days. Oh, is that a stalling motion? Yeah, it is. All right, we're back, I think. I'm not sure what the internet's doing these days. It's just been very difficult. That's a brand new A right there. That's a brand new B, and we're about to try for the leg C in the weekly chart. And that's just saying very slowly within the containment area, bonds In fact, the T-note yield, or bonds generally, have held very well. They work in their way towards this pattern. Usually works its way towards the upside, which would be 43.33, 4.333. That was made, I think it was back in October of last year. But it isn't breaking out per se at this particular point. Will it do that? Well, from the chart pattern that I'm looking at, it will if we start to trade from 38.12 right now. If we start to trade on a weekly basis above 40. There's no question in my mind that that's the pattern that says cup formation, breaking out to the upside, watch the 43s. But we haven't got there yet, so it's a process. So that was a question. Then end phase was another question right here. Oh, did I write those down? I had a couple of questions yesterday from GT, and I wanted to get to them. I'll see if I can get to them and find them. I think I wrote them down. Right here. Checking. All right, I've got some things going here. So ENPH, 177.38, down $1.84. In phase, Energy Inc., Energy Battery made a peak D in the monthly chart up in the around about the 340s, plunges down to the most recent low, just under 150, or at 150. Bounces, has this huge gap. There was an earnings disappointment, and one day it's tootling along in the 220s. It's at 220 to 228 on the 25th of April, and the next day, bam, the high is 183.31, and the low is 160.61. And then, you know how I like to look at it on the downside. I look at it and I want to see what happens within 1 to 3 sessions. On the upside, it's a whole different process. But on the downside, what happened within 2 sessions, it not only took out the left side low, it went quite a bit lower. And then the third session, it closed below that. And then the fourth session, it went way down to the low of 152.15. Can you believe 220s? The next thing, 150. 152, and then it saw its peak A, peak B, peak C, and it started to stall. But that peak C went above that gap down high of the 25th of April of 228.36. So where is it right now? It's at 179. It's starting to pull back. I think it's really important that it did hold 1 or 2 candles above that previous high, the high that was that April smash to the downside. But that weekly chart says there's a lot of work to be done. As I'm looking at it, if I'm looking at 3 months, 4 months, my assessment here is that end phase, if on any weekly basis, if it actually closes above, I'll give it a little bit of room, above 198, there's a good chance that it could start to move over a period of weeks. Trying to get to the high of the 28th, the week of the 28th of April of 228.36. That's the way I'd look at it. I'll be back in a moment. Basil Chapman, and we're looking at the E-mini. What did it do? Oh, I hit the wrong button.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're back. I'm just going to draw this for you to show you what the kind of thing that I like to do. So over here is a big rectangle stuck between 44, let's call it 44.30, and 43, it was 43.95, now it's 43.90. And within that context, we've seen this so many times in the overnight futures where there's a very small trading range, regardless of what happened the previous day. There's just a sideways move. Well, we've broken it to the downside. So one of the reasons why I've been saying to subscribers, we've got to be cautious here. This is not the time to be taking too many chances on anything new until we've identified that the sector if there is a sector rotation, is kicking in. And I think the clue here, so NPH, I'm saying, I've got the chart right here. There's the daily on the left, weekly in the middle, monthly on the right. And I'm going to just draw this in right now to show you the type of thing I like to do. It's just these are lines that give you some sense of, just give you a perspective. So you can see I've drawn this in kind of cautiously, saying this is the inside track propellant or support level right here. If it takes out this green line, the monthly chart, at any point, that is really very negative. If it can hold you and keep moving away from this line here, the inside track propellant, you don't want to see it become a repellent because the price goes underneath it in a big arch formation, or that could certainly happen. But the most important aspect it doesn't matter what you're looking at. It's called Enphase Energy, ENPH, trading down 240 at 176.80. That's not the issue. Just look at the chart and say, hey, wait a minute. This has got a very big arch formation right here. I'm not talking about symmetry or anything like that. I'm just saying it's rolling over, and it looks very much that the speed with which we've come down is greater so far than the speed with which it went up. And that makes the whole area of 140s kind of like a target. And you've seen on a monthly basis, look, it went S, meaning the 9 period went negative, turned pink, below the 14-period moving average. That's a negative. The MACD is weak. The stochastics at 27%. On-balance volume is holding steady, but it is lower. So this all says, be careful with this stock. That opportunity where it went into the 180s was an opportunity to say, okay, this is where I need to recess if I'm long or if I want to go short or whatever it is. But now the 9-period moving average in the daily chart is positive at the close of yesterday, at this particular point at 176, which takes you to right there. It's still okay. I don't think the 9 will cross negative, but if it takes out the left side low of 3 days ago, it'll be 4 days ago because of today. At 169.63, there's a chance it goes back into the 163, 160 area. So just be very careful there. Another question I had was Advanced Micro, was a fuel cell? Yes. So someone emailed me yesterday, a GT email to say, what letter is it? Yeah, it's in leg D. It's in leg D. It's trading. It closed yesterday at 257, but it hit. It's amazing. $2.94. Trading now at 252. Not a big deal. 40 cents, right? That's about 8% or so. Yeah. And now what we're looking at is in the cup and ladle, Chapman Wave cup and ladle, if it takes out in leg C, the left side high, it can go quickly to a D, but then you've got to be careful because the support of the lip on the left side, in this case, 251 was the high on the 8th of May. That becomes support. The further it goes below that, the greater the chance that you've now created a resistance area. Here's your beautiful cup formation. I did not use... If you use the left side low to the right side, you got a lopsided action. It broke above in a shorter time frame. That's part of the Chapman Wave cup and ladle pattern that we look at. So the low of 1.96 on the 26th of May, you can see there's disparity here because it took less than 3 bars to that right side to break above it. And so if you're looking at the weekly chart, well, the week's still got 2 days to go. So we'll see if there's a close underneath the black 14-period moving average in the weekly chart of 2.45. That says, uh-oh, it's back to being stuck. And that monthly chart where not once has it been able to break above the 14-period moving average, certainly, and close above it since November of 2021 when it hit 1163. It's hit it a couple of times, but it can't close above it. So this is tells you that fuel cell is still in a big consolidation. It's attempting to form some kind of a low. That's important. The next thing I wanted to look at was advanced micro devices. So people had asked, is advanced micro devices about to take over where NVIDIA, if NVIDIA takes a bit of a breather, so NVIDIA's down 6 points at 424. It broke out of this cup formation, and in this particular instance, I have to call it an F. I'm not giving even an alternate count. I'm just saying I'm calling it a leg F right now. Leg F in the weekly chart, although that one could have an instant restart renaming F/B, but I'm calling it F for now. And the monthly chart is either a G or an A. If it's an A, NVIDIA is going to go soaring in 2023. If it's a G, and that takes a full month of not having a higher high than the previous month, so we have to wait all the way through July to see if the high of June is taken out. And that will say, okay, how deep it pulls back tells you whether this is a G or a G says, oh, be careful. You just want to get out of every rally. A says, are you kidding? I want to buy every single pullback because it should still go to B, C, and D. This is the one time where the Chapman Wave methodology says you have to go on a short-term basis and go via all the indications that you've got before you can make longer-term decisions. And the short-term says, I haven't even, after all these weeks, I haven't taken out the low of, what did I say? It was 366 something. Yeah, 366.35, the gap high of the 25th of May. So this is almost the exact opposite of end phase. So what we're looking at here is that I suspect that NVIDIA is still in play. It looks great, but it could certainly pull back. And I've been saying that I think in June you will break under 366. And here it is at 429, actually 423 today. I think it will be breaking under it, at least digestive-wise. Now, the other thing that I want to look at was, I wrote it down here. Did that. Yeah, XLF. So a lot of talk about the financials, and then all of a sudden it got a little quiet. I have this in. It could be an alternate account, but it's a leg F. All the technicals are very strong. 200-period moving average is at 33.71. It's trading right now down just 8 cents at 33.13. So this is really important because I've been saying for quite some time that I need to see the financials, and that includes the IAR and the KRE. So let's just go to KRE right now. We are still, at least I think we're still long. Yeah, 42.59. I'm not sure if we've been stopped out yet. I've made a very tight stop. We're long. I want to take a profit. We can always get back in. So it's at 42. This is the regional banks and the IAI. And we'll talk about that as soon as I return for the final segment this morning. This is the early edition.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, we're back, final segment, and I'll be doing the same thing, early edition tomorrow morning. It will be repeated. And for subscribers, I will be doing my market overview probably on Sunday. We do have a holiday on Monday. So the IAI, which is the iShares broker dealer and security ETF, trading unchanged right now, 91.55. I've got this as a potential alternate account, but look, all the technicals are very good. That's the reason why I can't get overly bearish here. I can get somewhat short-term bearish, but when you've got the brokers moving and at least the financials at this particular point are holding quite well, that's important. So let's just go through this. I'm going to go to the continuous contract in the E-mini. The prices maybe could be different, but they've come back very nicely. Now it's down minus 12. Let me just double check here to see what at 40. 06 is because, yeah, we're exactly the same. So you can see what I was saying is within this long rectangle formation, we've gotten to the bottom. I suspect that there is still internal strength, that you've got to allow this internal strength to take a few days to resolve itself to the upside, and only then can you start to look at some serious action to the downside. And you need to see all your little ducks in order, because if you over anticipate without putting in tight stops, that could be a problem. So as I was saying before, we might even land up, for subscribers, we do this every once in a while where we're looking to the short side, but we still have the long side, and then one of them just tells us which is correct. And that's all the is. So for a couple of days, you kind of break even because you're doing, the same thing. So this is a leg D right now in the E-mini and the 1 minute chart. I can just tell you this: is this going to be a two click session? This is the low, and now you're going to be watching it all day going to the high. No, I think it's going to be it might turn out to be. But I think that what we're looking at is very choppy action to the upside while the market really tries to digest what happened yesterday. So let me just sum it up for you in a very brief moment. What we're looking at in terms of the S&P and the QQQ, that's the index 100, is that there is still enough residual strength to say it can go higher. For the Dow, it was oversold yesterday because of UNH, and it could get some of that back today. So this is going to be a choppy period for the next few days. We'll follow it up tomorrow with Tiger Technicians Hour.
You might think